Does getting a homeowner's insurance quote affect your credit score? The truth is that there's all kinds of stories out there about what affects your credit and what doesn't affect your credit. In this episode, we're going to cut through the true from the false. In this episode, we'll answer the question if insurers check your credit when getting homeowners insurance. Then we'll dive into how your credit score can affect your insurance rates, and we'll explore the credit-based insurance score. We'll also discuss reasons why insurers look at your credit score and how much this affects you. All right, let's get to it. Okay, so now you're a homeowner, now it's time to shop for homeowners insurance. The best thing that you can possibly do for yourself is definitely go ahead and shop different companies to get the best rates on homeowners insurance. It can vary widely. And I'll give you an example from my home. When I shopped homeowners insurance, my first quote came back almost $1,000 more for the year than the second quote that I had gotten. I got a less expensive policy, but it covered more than the more expensive policy. So shopping rates is going to be really important. So do insurance companies pull your credit when you're shopping for homeowners insurance? The truth is that a vast majority absolutely will pull your credit. After all, your credit is a tool to help them gauge how much risk you might propose to them. So the credit score that they're going to use is called a credit-based insurance score. It's called a CBI. Each state has their own requirements when it comes to whether they can actually use a credit score or not to evaluate you for homeowners insurance. Okay, now, well, of course, you can probably shop different companies and you can find a homeowners insurance company that's not gonna pull your credit, but you can bet that you're gonna pay with higher premiums and a more expensive policy all the way around. If they can't pull your score to evaluate risk as pertains to your specific situation, they're probably going to try to charge you as much as they could possibly get away with. In other words, you're going to pay at the top end of what you should be paying. In some cases, people want to avoid the credit check because they feel like an extra inquiry on their credit profile is going to really do some damage to their regular scores. The truth is that the credit scores that these companies are going to pull on you are in most cases going to have no impact at all. It's not going to be a true credit pull because you're not actually seeking credit. They're just trying to evaluate what risk you present to them. So can your credit score affect your overall rate? You bet. We've already talked that your credit score can definitely affect your overall rate. If you feel like your insurance is higher than friends and family and people around you, and you've done comparison shopping to people that have also gotten homeowners insurance with the same company, odds are that your credit score is not going to be high enough to get the best rate. So insurers are going to use a rating system to evaluate how much risk you might present them. Believe it or not, there's a high incidence of people that have lower scores and filing higher claims. And this is kind of across all insurance. It might be for homeowners insurance, but it also applies to auto loan insurance. There's going to be that parallel that the insurance companies assume that if the scores are lower, that there's going to be a higher probability of claims, and they've actually got a lot of evidence to support that this is actually something that happens with frequency. Now remember, the scoring system for the insurance industry is going to be different than, let's say, if you're going to go make an auto purchase, or if you were going to go get a credit card, or if you're going to go make a mortgage purchase. So this is specific to just the insurance industry. While you don't have access to your insurance score, or at least the scores that the insurance companies pull, you can bet that it trends the same way that your actual scores will trend. So if you're looking at your Vantage score or you're looking at your FICO score and they're both trending in a certain direction, in other words, your FICO score is above 740, 750, then you can bet on the insurance side of things, you're going to pull an excellent score. Now, before we discuss whether an insurance-based score is a soft or hard inquiry, please like my video and subscribe to my channel. I'll be working hard to bring you a video each weekday over credit, lending, real estate, and other relevant personal finance topics. So we've talked about credit scoring on the insurance side and what that looks like, and how the insurance score is going to be a different type of score that the insurance industry pulls. That's going to be different than if you were actually seeking credit for other purposes. Your credit-based insurance score gauges your overall risk that might be presented to an insurance company. Now, in terms of your credit-based insurance score, they're going to have some of the same positive effects and negative effects as your regular credit. Positive effects are going to be if you have a long credit history. with no collections, no late pays, you're not maxed out on your credit cards. All of those things get computed the same way it does for your normal credit score. The only difference is that the insurance-based score is going to be calculated a little bit differently. So when you apply for credit, whether it be for a credit card, an auto loan, or for a mortgage, applying for credit actually does hurt your credit score. It's going to hurt you, and it's a hard inquiry. It's usually going to cost you 3 to 5 points. But these credit-based insurance scores, when they're pulling credit for homeowners insurance or any kind of insurance, it's considered a soft inquiry. In other words, it's not going to hurt your credit score in any capacity. If you have credit challenges or just need help with your credit, then I have a gift for you. My team will complete a complimentary credit analysis specifically tailored to your financial situation. The only cost is that you must purchase a smart credit report. This gives us the data so that we can build out a customized plan for you. Please click the link in the description below for more information.